The markets have now recovered all their losses since the beginning of the conflict between Israel and Iran. G-Squared Private Wealth founding partner and CNBC contributor Victoria Greene and CNBC senior markets commentator Mike Santoli join me now. Mike, I'm going to kick this off with you. Set the stage for what we've seen this week and the fact that, for lack of a better term, a peace dividend seems to be pricing into this market now.
Yes, a peace dividend because you had a little bit of a peace tax or a war tax that was at least threatened a few days ago. The market operates on how are things today relative to what we expected yesterday or a couple of days ago. And on that standard, there's a lot of reason for the market to release some tension here and rebuild equity values back toward where we were 4 months ago. Let's keep in mind, back in February, when we traded at all-time highs in the S&P above 6,100, nothing had been done to Iran's nuclear capabilities to reduce them, right? It wasn't as if that was holding back the market, but once it was introduced as a threat and then it seemed to be set aside as a threat, the market can see its way clear because large institutions are still a little bit underinvested. The technology theme is really working again. Earnings, at least right now, seem like they're holding up. Credit seems fine, yields down. So, in other words, the market's taking away a lot of the things to either worry or complain about and is benefiting, at least for now, in this run toward the old highs.
Victoria, we have an S&P that's trading at 23 times 2025 earnings here. It's looking a little expensive. What do you like? And are valuations rich?
I don't think, valuations, nothing's cheap right now, but I think you could still continue to see multiple expansion. I think you're going to also see earnings growth. Very moderate expectations for Q2, right? Backsets at about 4.9% expected earning growth. The bar is really low. That's great because typically you can hurdle that well. We're really excited about financials reporting in a couple of weeks. And I do think the multiples could continue to expand. We're in a bull market right now. I think we're going to hit new highs. And when we hit new highs, that is a really bullish signal we can continue to run. And yes, there is a lot out there, but look at this market's ability to climb this wall of worry. You know, if you were to say, oh, hey, we're going to have a direct strike on Iran and the market's going to rally 2% afterwards, you know, over the last 2 days, I think everybody would have laughed you out of the room. So number one, geopolitical conflict means less to the market than it does to individual investors. Two, we need to kind of sit on our hands and not knee-jerk if we get some bad news, whether it's tariff, whether it's a ceasefire not holding. It looks like the likelihood that everything's going to turn out okay is a fantastic way to invest this market right now.